In this video, I'm going to talk about what is relative volume and how do we use it. Stay tuned. Hey traders, a very warm welcome to you. Okay, so what is relative volume, or otherwise known as RVOL? This is something you see on some trading platforms. It's also something that you can code yourself and have done yourself. I also know that some other charting packages as well have it. What is it? How useful is it? Let's talk about it. So, relative volume it compares the current volume to the normal volume for the same time of day and expresses it as kind of a ratio. So let's say we're looking at the first hour of trade. So this is our first hour of trade here. Okay, it's going to compare the current level of volume. So let's say that's our volume level here against the normal volume, and is going to give us a number. If it's running at twice the normal volume, the number is going to be 2. If it's running at 3.5 times, it's going to be 3.5. You get the idea. So what we're doing is, it's for an intraday trading. Obviously, it's a kind of tool that you're going to look at as an intraday trader. And the reason you'll look at this is you'll say to yourself, how active is this stock, or how active is this market compared to its normal, in inverted commas? So why is that of any use to us? Well, if it's more active, first of all, actually, you know what we'll do? Well, let's just define volume. So volume, I know people are going to kind of think, well, we know what volume is, but let's just make sure we're on the same page here. Volume is the number of units traded in whatever we're looking at. So if it's stock, it's the number of shares. If it's a futures contract, it's the number of contracts. If it's currency, slightly different. It might be the total value of the currency based in pounds or in dollars or in yen, whatever it may be. The point is, it's an understood unit of value. It doesn't necessarily mean the number of trades. Like I could trade with you, we could trade 1 million shares each. That would be one transaction, but the volume would read 1 million. So theory is, the more volume we have, the more participants we have. That's a little bit of a generalization, because you could have 1 or 2 big participants, but generally speaking, the more volume, the more people are getting involved, and the more people are excited about the market, the more people are taking a position, the more people are cutting a position off. And you see that in charts all the way over, guys. Big moves tend to come with big volume. So the point is, if we're looking at this and we're seeing a high relative volume, as a trader, we want to be involved in that, because it means more participants, it probably means more range, means more volatility, it means more opportunity. If we looked at it and we saw a relative volume of, say, 0.5, which we often see on quiet days before holidays, or other days where there's nothing going on, then we don't want to really get involved in it too much as traders. And then from a technical perspective, if we see high relative volume, what strategies do you think we'd want to trade? We'd probably want to trade momentum strategies, trades that are doing kind of inside out, so from mean to extreme type trades. We're not going to generally, I am generalizing here, of course we have to in trading, we probably wouldn't want to be kind of trading mean reverting, because ultimately more volume coming in generally results in a bit of a range expansion, a bit of a more range than usual. Not to say there aren't any opportunities there to fade highs and lows, but generally we know that if more people are pushing in one direction and we're seeing a big aggressive move, we're going to be very cautious about fading that. And similarly, there's nothing worse if we've got a really quiet day just trying to force a breakout trade. Most of the time, breakouts are not going to work in your favor when volume or relative volume on the day is low, because the participants are not there, there's no flow, there's no reason for people to make urgent decisions. They're leaving price orders in, limit orders in, they're not getting filled, they're not going to market, therefore they're not moving the price. It doesn't make sense to get involved. So it's comparing the current volume for the same time of day. Now, if you've got a custom indicator, I've had one made before, which I use, which draws data in and compares it to whichever time frame I want. So I can have the first 15 minutes. I can see, hey, this volume is running at, a lot more in this first 15 minutes than normal. And again, if you're coding yourself, you can define normal. If you're using it from a platform, you're going to have to see how they create that formula, what they take normal from. They take an average over that period. They take a mean. They take, which is the average. They take a mode. How do they do it? And then you can work out yourself. But it doesn't really matter. The point is, all we're looking for, excuse me, as traders, is something unusual. And if we see a stock that's running on high relative volume, perhaps after earnings, or perhaps it's a currency pair that's on high relative volume, or it's a futures contract, it means that a lot of people are getting involved in it. When we have a lot of people getting involved in it, it creates and presents opportunity. Anyway, guys, that's relative volume, and that's all I've got for you. I hope you take care, and I hope you manage the risk and good trading. I shall see you on the next one. Bye-bye.